And with Facebook going public, there's going to be a big hole soon in the markets that trade shares in pre-IPO companies. One, Second Market is trying to make up for the lost Facebook business with a trial program trading shares of closely held community banks. Joining us now, one of the very first investors to pioneer secondary market trading a decade ago. Hans Swildens is founder and managing partner of Industry Ventures, which holds stakes in Facebook, Zynga, and Twitter. Welcome back. Always great to have you.
Thank you.
So, you heard that story, Facebook valuation dropping to $98 billion. I'm sure it will continue to go back and forth. But ahead of the IPO, do you have any concern that all of the upside has been priced out of the company by this point because of the secondary markets? And you've seen that upside, but for everybody else?
It's hard to tell. The stock's never really traded based on fundamentals. So a month ago or 2 months ago, the stock was trading at $30 to $32, and now it's at $40 to $45. The stock trades like a public stock because there's weekly auctions. There's shares being traded daily. So it's really hard to tell. I think it depends on the 800 million users of whether or not they actually buy shares in the company or not.
The Zynga IPO, it didn't pop as much as some expected. Initially, I mean, is that because of the second markets? Or is that because of Zynga's fundamental business?
Zynga was an interesting case where in the summer last year, the stock on the secondary market was trading at around $17, $18 a share.
Which is far more than it is now.
And it went public at 10. So obviously anyone who bought in the private markets had locked up securities, so was not happy when the company priced. But it's since gone from 10 to 12 or 14. I think it's back to 12, which is good because it didn't break its IPO value. So I think the underwriters did a good job pricing the stock.
So that's sort of a cautionary tale. This can be a risky business, trading in the secondary markets.
Oh, this is one of the riskiest asset classes that exists outside of commodities. Venture capital in general is, you're buying liquid shares. They typically have to be held for 10 years, and it's extremely risky.
Now, as we mentioned, so much of the volume currently on the second markets is Facebook. What happens to the secondary markets when Facebook IPOs?
I think there's two types of, I guess the market bifurcated into two areas. You had the top 30 private companies that had more than $1 billion of enterprise value that were brokered through second market and share posts. A number of them have actually gone public, and so there's obviously no more secondary market there. But there's 30,000 private companies, 2,000 companies have more than 50 million of revenue. So there's a deep market underneath that. In terms of the brokers and the high-flying consumer internet names, a lot of those names are going to be public, and so there will be no second market. So in terms of where the brokers and have to focus in the future over the next 3 to 4 years, they have to go to the lower, kind of lower mid-market and focus in other areas outside of consumer internet. And it's unclear if they're able to actually do that, because over the last 3 years, as they dipped into semiconductor companies and software companies and communications companies, they've been unable to effectively trade those securities.
Right. Twitter has also made it a lot more difficult to trade secondary shares of Twitter. How is that impacting things? You're already inside.
I think they. I don't know what's public or not related to Twitter, but yeah, it's similar to Facebook. Facebook went through the same process where they kind of ebbed and flowed of whether or not they were letting people trade the shares and if they'd exercise a right of first refusal or not, or if they'd place them internally or let you buy them externally. I think Twitter's going through that same time of its life where they're trying to grasp with how much of this liquidity do they want in their shares.
And as you've done over the years, your portfolio is very diverse. You've got some lesser-known companies you've picked as great secondary investments: Vitrue,
that's one.
LifeLock, and Everyday Health.
Yeah, Vitrue's a good example of a great up-and-coming business that has a great CEO. It basically enables enterprises to market their products and manage the communication between Facebook,
right,
Twitter, LinkedIn, Google+, with their brand. And so it does analytics and consumer capture of information.
So Vitrue, Everyday Health, and LifeLock. Hans's picks. Thanks so much for joining us,
Thank you very
Hans,
much. Appreciate
here
it.
on Bloomberg West.